Welcome to AI on the Block, featuring Max Ledger and Allison Hashwell, presented by Evolve Blockchain.
Welcome to the deep dive. You know, for years, if you've been following digital assets, it's felt a bit like, well, like regulatory limbo.
Oh, absolutely. A lot of uncertainty.
Right. Innovators wanting to build, investors keen, but everyone's kind of looking over their shoulder. Is this legal? Is it a security? What is it?
Exactly. And that pushes things offshore, which isn't ideal for anyone, really.
It's been frustrating. But maybe that era is ending, or at least changing dramatically. Today, we're diving into something pretty huge. The SEC's Project Crypto, announced back in 2025.
It's definitely a significant development.
It really seems like more than just a minor tweak. It feels like a strategic shift, doesn't it? A signal the U.S. wants to integrate digital assets, not just police them.
That's the core idea, yes. Moving away from purely enforcement.
To actually enabling innovation here in the U.S.
Precisely. And Commissioner Hester Pierce, Crypto Mom, is really driving this, implementing those working group recommendations.
Okay, so let's unpack this. Our mission today is to figure out how this whole framework plans to cut through that fog.
Yeah.
You know, give clarity on assets, support tokenized securities.
And basically weave crypto into the U.S. capital markets.
Exactly. And crucially, what does this mean for you listening right now?
Yep.
Potentially a much clearer, maybe more innovative digital future.
Yeah, a more predictable environment, hopefully.
So let's get into it. If you've been in crypto at all, you know, the big question, the one that's caused so much headache is, what is this thing legally?
Security, commodity, something else?
Right. It's paralyzed projects, left investors guessing. Project Crypto aims to fix that. And it starts with a really foundational change.
It does. The first pillar, and honestly maybe the biggest news here, is clear asset classification.
Yeah.
The idea is to put digital assets into clear boxes. Securities, commodities, stablecoins, or collectibles. 4 categories.
And the kicker is?
The kicker, the real insight, is the expectation that most crypto assets are not expected to be securities.
Wow. Okay, that's huge.
It's a potential legal earthquake, really. It could instantly remove a massive number of projects from direct SEC oversight.
So it shifts the burden, makes it easier for projects to know where they stand.
Exactly. Firms can figure out, okay, is this SEC territory or maybe CFTC or something else? It cuts down that ambiguity that's just choked the space.
Right.
And if you zoom out a bit, this clear definition, it's not just labeling, it's the bedrock, you know, everything else, innovation, integration, it all builds on this foundation.
Without it, you're building on shaky ground.
Totally. Shifting sands, as you said.
Okay, so that clarity sounds absolutely game-changing. But knowing what something is, that's one thing. The next big hurdle is always, how do you launch it? How do you grow without getting tangled in all the old rules?
Yeah.
Rules made for, well, a different world.
Traditional finance rules applied wholesale often don't fit.
So how does Project Crypto make sure this new clarity actually helps innovation happen, instead of just being a clearer way to say no?
Right. Good question. And that brings us to the next couple of pillars. Purpose-fit regulations and safe harbors, and this thing called the innovation exemption.
Purpose fit. Okay, tell me more.
So Project Crypto sets up tailored disclosures and, importantly, exemptions specifically for how crypto actually gets distributed. Think ICOs.
Initial coin offerings, right?
Yep. And airdrops, where tokens just appear in wallets. Network rewards, like for staking or mining. And those tricky pre-functional tokens.
The ones issued before the network is fully live. Crucial for early funding.
Crucial, exactly. The clear goal here is to significantly cut the compliance burden for these projects, especially when they're just starting out.
Makes sense. And the innovation exemption.
That one's interesting. It's described as a principles-based regulatory relief. The idea is to let new crypto models launch quickly with limited but targeted oversight.
So kind of a sandbox, but maybe more flexible.
Sort of, yeah. It addresses that balancing act you mentioned, protecting consumers while still allowing for that rapid innovation we see in crypto.
How do they balance that?
By focusing on these specific tailored rules and exemptions, the framework is really trying to encourage projects to launch in the U.S., you know, keep that growth and capital formation here.
So less fear of immediate enforcement, more room for experimentation.
That seems to be the goal, regulatory experimentation within defined boundaries.
Okay, so they're building an on-ramp for innovation, trying to keep good projects domestic. Huge. But let's shift gears slightly. What about the existing financial system? Is crypto just getting bolted on, or is this rethinking the actual structure? Like, what about stocks and bonds? Are they going digital too?
Oh, it's definitely aiming for a fundamental rethink. That's where pillars like tokenized securities and on-chain markets and on-chain infrastructure in DeFi come in.
Tokenized securities. So stocks on a blockchain.
Essentially, yes. Project Crypto explicitly supports issuing and trading tokenized versions of equities, bonds, other traditional financial products.
And the vision there is?
Faster, more transparent settlement, all happening on-chain. Think about it, a big bond trade settling in minutes, maybe seconds instead of days. All verifiable on a ledger.
The efficiency gains could be massive.
Potentially huge, and it goes beyond just tokenizing old assets. The framework actually encourages DeFi protocols.
Decentralized finance?
Right. And blockchain infrastructure itself to become a legitimate part of the securities market. They're even talking about amending existing rules to make way for decentralized models.
Embracing DeFi, not just tolerating it.
Seems that way. And the potential impact here, it's really about market efficiency across the board. Faster settlement, potentially deeper liquidity, much greater transparency through tokenization. It could really reshape how global finance works.
Faster, transparent, on-chain. That's the dream for many, isn't it? Unlocking value. Okay, looking even further out, could we see totally new kinds of financial platforms, maybe ones that blend banking and crypto? And super important, how do you hold your assets safely in this new world?
Yeah, and that leads directly into super apps and platform integration and modernizing custody standards.
Super apps, like the ones you see in Asia.
Exactly like that model.
Ha.
The framework introduces this idea. Single licensed platforms that can offer a whole suite of services. Trading, lending, staking, custody, dealing with non-security crypto.
All under one roof?
All under one regulated roof. And the big takeaway here for you is this isn't just about convenience. It's about allowing U.S. companies to compete globally.
Ah, so creating U.S. equivalents to those big international players.
Pretty much. The SEC is signaling, we see what's happening elsewhere. We want that kind of integrated service here, too. Imagine simplifying your whole digital asset life onto one trusted platform.
It could bring a lot of people in off the sidelines. What about custody, though? Holding the actual assets.
Crucial point. Project Crypto tackles this with modernizing custody standards. It explicitly recognizes both ways. Self-custody, where you hold your own keys.
Your keys, your crypto.
Right. And institutional custody, which is essential for big players, funds, banks, endowments.
What needed modernizing there?
Well, think about old rules, like the Investment Company Act from 1940 talking about physical possession. How do you physically possess a Bitcoin?
Good point. Doesn't really work.
Exactly. Those outdated frameworks basically locked out big institutions from holding crypto securely and compliantly. Modernizing these standards, replacing them, is key to unlocking serious institutional participation.
So potentially paving the way for trillions in new capital.
That's the hope. It removes a major roadblock for mainstream large-scale adoption.
Fascinating. Streamlining access, modernizing custody, really building out the infrastructure. But, crypto regulation has always been this tangled mess of different agencies, right? SEC, CFTC. How does Project Crypto deal with that overlap, that confusion?
Yeah, that's always been a pain point. The framework directly addresses this with a focus on interagency coordination.
Okay, so getting everyone on the same page.
That's the goal. Streamlining oversight, fostering real cooperation between the SEC, the CFTC, maybe banking regulators too, trying to cut down on duplicative rules.
Which cost projects time and money.
Absolutely. And create a much more cohesive, predictable environment for everyone involved. Less confusion.
And what's the bigger picture benefit of that coordination?
It helps prevent regulatory arbitrage, where companies try to shop around for the regulator they think will be easiest on them.
Right, exploiting the gaps.
Exactly. Better coordination closes those gaps, creates a more level playing field, and just provides a more stable, mature regulatory landscape. It signals the U.S. is serious about getting this right, holistically.
Okay, this has been incredibly thorough. It really feels like Project Crypto isn't just tinkering around the edges. It's a serious overhaul. Thanks for joining us on The Deep Dive.
Thanks for listening. Be sure to join Max and Allison next episode as they dig deeper into the different facets of Evolve blockchain. This has been AI on the Block.